All right, good morning. Let me just do this really quick, guys. Make sure this is muted here. All right. Elijah, good morning. We're just gonna give it like 1 or 2 more minutes here, and then we'll get started right away. My bad for starting late today. Good morning, good morning. But all right, guys, let's just go ahead and get started here with gold. But first off, wanted to quickly take a look at the economic calendar, and just to see that for this week, we don't have too much important economic data. And I say important because right now we understand that the markets have been heavily focused on mostly those inflation reports, the FOMCs, to see what the tone is from the Fed, right? So we want to make sure that we get through this economic calendar. But like I said, we really only have to look out for FOMC minutes, which is on the 20th. So that'll be on Wednesday, later in the afternoon. FOMC minutes, as you guys know, is just a more detailed FOMC, right? We get to see a bit more what they actually were talking about. Sometimes we get new information from the Fed, but for the most part, it does not bring too much economic impact because of the fact that the Fed already spoke, and it's based off the previous FOMC there. And also we have, let me just make sure. Yeah, later in the week, really just some manufacturing index, some PMI reports to look out for there. But all right, guys, let's go ahead and take a look at gold. We're gonna do a review. Derek, I'll be happy to answer your questions in just a second, my brother. But let me see. All right, guys, so let's go ahead and get started doing a fresh top-down analysis here, starting off from the weekly, or excuse me, from the daily time frame here, because we understand from last week, if you guys followed along, we understood the area where we were at. We were at this area of support just close to those 4,500s, and so that's the first area that I want to go ahead and mark off, just to have that visual right here of that daily time frame right here. And you can see the 4,500s, it marks off as an area of resistance before we broke above that and pushed higher. And then you can see also an area of resistance before once again breaking above that. Here it was our area of support, which we created that on, what day was this? That was on Wednesday, April 28th, 29th, that you can see right here, right? And so we can see how price established this as an area of support. And we have our highs on this daily time frame. Remember, we're looking at the daily here, around those 4750s right around here, okay? But let's go ahead and zoom in. I'm noting also another area here around these 4600s, because obviously the 4750s is very, very far away. So that's not something we're worried about. We're gonna be worried about right now. Let's take a look at this on the 4 hour. Sorry about that, guys. But all right, looking at this on the 4-hour, we can see how price, once more, we had that very strong sell-off from last week as those geopolitical tensions continue to escalate. We understand that gold has been more influenced on the bearish side due to all of the recent talk about the Fed becoming more hawkish. We have markets pricing in now a potential rate hike for December. I'm not sure if you guys were aware of that, but there is, the markets are right now preparing themselves for potentially higher inflation. We could see rates stay higher for longer, which we understand that has been pushing dollar towards the upside. Let me open up the dollar here so that way we can see that as well. But we can see just right here on the US markets, the dollar, we have this marked off from last week, but from last week, again, looking at this on the daily time frame, look at those days right here. Just pure bullish price action, strength on the dollar, yields were climbing as well. If we look at that, it pretty much all correlates. And so again, we understand why gold has been more pressured these past couple of days, and really nothing has changed, right? Nothing has changed other than the fact that price has reached this area of support, and we're now obviously starting to show some reactions. Funny enough, if you guys were here on Friday, although we were still looking out for further bearish price action and further bearish moves, we understood very well that at this area close to those 4500s, we've seen very strong reactions, right? We'll go ahead on the whiteboard here and we'll point that out because, again, I want to make sure that we understand where price is, just so that way we can continue. But just by zooming out, let's say like just on this 4-hour alone, we can see those strong reactions that we have around those 4500s, where you have like this steep sell-off and then price stops at the 4500s, right? Here you have the sell-off below the area, below the 4500s. And then when you look at where price retraced to and where it did a pullback to, you can see the wick got created right into those 4500s, right? So the 4500s is clearly a very strong area of interest, right? Here we have price action kind of messing around the area, breaking above, going back to retest before breaking back below. Got a little bit messy right here before once again retesting this area. And then look at how once we really get above that zone and start to see further candle pushes, we start to see a retest of these highs as well, failure to break any lower and staying above those 4500s. You had then a strong push towards the upside, right? So again, clearly the 4500s is a strong area of interest. We continue to follow along and we see once more on this 4-hour time frame, 4500s is it's around the 4520s that I have marked off. But we know that the overall level, kind of like that psychological zone that price is reaching, is those 4500s, just a little bit below the 4520s. So again, you see the wicks rejecting and then continuing to push higher. Once more candle bodies and wick rejecting before pushing higher. And so our preparation for this day was to be on the lookout in case we got further exhaustion at this area. And so what we got was a little bit mixed because price, once I zoom in here, I'm going to show you guys in just a second, price actually got to that zone and we were having strong reactions. It did look like price was going to stop around those areas, but we actually we got like a I want to say a short-term move down. We got a short-term move lower because price action, as you can see, this wick right here on this 1 hour, we pushed below the area, but overall we couldn't really close below that zone. Notice how price action here on this 1 hour, you have this candle body staying above those 4510s, right? Look at how, for example, price action here, although it was pushing lower and we did get below the zones, excuse me, the 1 hour candle could not really close below. So again, that still signals that there was some buyers pushing back at this area, and you can see the follow-up after that. Pretty much no further candle closures below those 4500s, still signaling that buyers were active in this area here. And then you had price reject and overall continue to push back towards the upside above our areas of interest, which was more or less the 4520s and those 4500s, right? So looking at this on the 1 hour, we'll mark off these highs, which is basically where we're at right now. and lines up perfectly with these highs that we see towards the left here. So these are the 45.71s. And so now we have our areas of support, we have our areas of resistance, and we understand what we're overall looking at. Looking at the market, if we look at this just from a visual representation and looking at this from a technical perspective, right? Because we understand the fundamentals. The fundamentals are very still on the bearish side for gold as dollar continues to strengthen, as inflation pressures continue to be a problem in the US. And so again, we can see that very clear price action that we're getting. But what we're paying attention to now after that we got this strong sell-off and price reacting at these lows and this area of interest here, what I'm paying attention to is the fact that we've bounced and rejected off of this zone, but we're at this new area of interest. So in terms of, let's say, price action, looking at the fact that price was now a little bit more bullish off of this rejection from this support, I would just be cautious in case we break above the highs and we continue to strengthen, because if we look at the dollar right now, the dollar is actually having a bit of a reversal, right? The dollar right now, if we look at this, this is the daily time frame on the dollar right here. You can see that off of these highs right here, we're having strong reactions and we're actually having a move towards the downside. Let's look at that on the 1 hour. So that way we can take a closer look at that. Again, this is the dollar, right? So right now, again, coming under some pressure, but really just kind of reaching this area right here of reaction. Let's look at that. I'm gonna mark that off as an area of support on this 1 hour. And so we're clearly under some pressure off of these highs, off of these 99.2s. You can see that dollar did have a move towards the downside there. But let's go back to gold here. And again, you can see that correlation, how it's like on the dollar, you're having the push lower. And we're looking at that on the 1 hour right here. And then you look at gold and you look at the 1 hour, and it's also kind of just reversing, doing literally just the opposite of what the dollar is doing right there, right? But we're now in both at a key area, which is the 45.80s or these 45.70s, which is where price is at right now. Same time that the dollar is at an area of support, right? So it's kind of doing a similar thing, just literally flipped. And so again, what I want to be on the lookout for in case we continue with this momentum would just be continued buys above those 45.80s. But overall, following the overall structure, I believe the opportunities that we can be on the lookout for, if we do not get those candle closures and like price trading above the 45.80s, would be a clean sort of sells off of this area, kind of similar to what we saw here, which is price action got to the zone. We broke momentarily below it before we retested that area, failed to really break above or stay above that area, and then we had a move towards the downside. So that's what I would be on the lookout for right now, because right now we're seeing somewhat of rejections off of this zone. Let me zoom into the lower time frames here, so that way we can have a much clearer image there. This is on the 1 minute here, that price is that we're looking at. So we're gonna do a few things. We're gonna mark off these areas right here. So for example, looking at this on the 1 minute and following the recent price action, which has been a little bit more bullish, pushing price into this area, what we want to see for bullish price action to continue strong would be this structure to continue being followed. Again, this is looking at this on the lower time frames, where you can see clearly this high being created. We have lows that got created, new highs, new lows. So the structure is clear. We have higher lows, higher highs, higher lows, higher highs. And so for this structure to continue following these lower time frames and kind of following from this right here, again, this sharp move towards the upside right here, this is what I wanted to show you guys. We'll just pay attention. Let me just zoom this in as I had it. There you go. Again, I want to pay attention. If we continue on this momentum, on this lower time frame momentum, if we cannot get back below these areas, those 45.64s, be on the lookout in case you continue to see price action breaking highs. And at that point, there would be no reason to really fight the market or try to look for sells if you see that the momentum is going towards the upside, right? Following it on the lower time frames, we've seen that on the 1 hour, what it looks like, which is the rejection off of support, and we're kind of bouncing off of that zone. So that's what I would be on the lookout in terms of the current momentum that we have with price action. Again, a little bit more on the bullish side, a little bit of dollar weakness, which is what we're getting right now. But let's talk about the overall flow of the market. I'm gonna delete this here. Let's go back onto the one. Just 1 second here. And by the way, if you guys have any questions, just please let me know. Don't be afraid to ask. All right, so before I go on to like the overall flow of the market, does that make sense what I just explained to you guys, right? The fact that the 1 hour candles have been more bullish, the fact that we've reached an area of support and we've rejected aggressively. Does that make sense in the terms of like, okay, we want to see continued buys only above these highs, above those 45.80s. We'd be on the lookout for, let's say, like breakout trades or break and retest. If we can break out and then retest, maintain above the 45.80s. So that way we can look for price to continue to push possibly into like the 4600s. Does that make sense for you guys? Because I want to now talk about like the overall flow into what we could see. Okay, makes sense. Cool. Appreciate that. So now what I want to point out is this. Although those buys make sense in terms of like the current price action, the momentum that we're seeing, the fact that right now we're also getting further pushes back into the upside while dollar is kind of weakening, the overall flow of the market is still bearish, guys. We're still bearish fundamentally. We're still bearish based off the price action. Like if we look at this 4 hour, we're literally just kind of like at this area of support where we have seen reactions in the past, right? So in reality, it kind of could be a pullback right now in case that if we are to get rejections off of these zones, then we can very much easily see a push down into like the 45.50s or lower back into the 45.20s and even lower like the 4500s, right? That's because the overall flow is still on the bearish side. We just need for those technicals to align. We just need for price action to go against that analysis that we just did, which would be this. I'm gonna take it back to the whiteboard and show you guys that other possibility to kind of signal, or excuse me, for us to really be able to see something in price action to be more clear for us, right? So just like I explained, still more on the bullish side, kind of how you can see on those lower time frames, that's very clear. But if we get failures to break above those highs, right? Let's say we start to get exhaustion at those highs and prices still continuing to struggle, be on the lookout in case you're gonna get rejections off this area. But you need to start trading below these structure points on those lower time frames for you to have a mix of this right here. What you'll basically see is price action rejecting those highs, which would be the 45.75s. So that would be our first technical confluence. What we need to see for further continuations and further sell-offs on price action is a break of this lower time frame structure. So it would be the rejection at the highs. You'd be now breaking the structure and these low points right here, which is the last low that price made for us before creating this new high for us right here. And once we start to get below that area, again, we would have more confluences in our favor because we would have the rejections at the highs, the breaks of the lower time frame structure. You would still have that 4 hour in your favor. You'd still be rejecting an area of resistance. But again, you really want to make sure you get below that structure point on those lower time frames so you can have that clear technical exhaustion in your favor. And then you have to just be on the lookout for price to retest these lows right here, which would be around the 45, we'll call it the 45, 46s, more or less around that area, where once you get below this structure point, you could make your way towards the downside here, right? So right now, as we're approaching that area, let's see if we're gonna get the actual breakout, so that way we can eliminate this overall bearish bias, or if we're just gonna get that, if we're just gonna get that continuation above that area. If not, this is what I would be on the lookout for, right? That exhaustion and those breaks of the lower time frame structure for the overall move to continue to flow towards the downside, right? So again, let's just be on the lookout here as price approaches this area. Because so far it's still looking strong. in terms of like the price action that we're seeing, we got no failure, or excuse me, we got like no candles really breaking lower. We only really got like price reacting at the highs. Slight low created there, another high for us right there, a low that's still respecting these lows. And now we're retesting those highs right here. So again, for us to continue cleanly on this bullish time frame, easy breakouts above those 4580s and watch out for further highs to be created there. If not, then you guys know exactly what we're looking for there. That way we can be prepared on both sides, just based off what we're seeing with the price action from today. Good to have you guys in the chat here. If you guys are new, make sure to ask me any questions. That way I'll be happy to answer you guys. For the GJ analysis, we haven't done GJ analysis. We do more. We can do like USD JPY analysis if you guys look into those. In your, let me see, IM or EM. I'm not sure how you say it. But all right, great day to you as well. In your analysis and entry, do you ever include or wait for the wick off spring before you enter the market? So I'm assuming you're talking about like maybe waiting for a liquidity grab to happen. In my opinion, you can't really wait for liquidity grabs to happen because you never know when a liquidity grab happens until after it happens, right? You got to wait for price to push into an area and then reject strongly for you to actually say like, okay, that's a liquidity grab. But for the most part, I guess, yes, I do wait for price action to reject first before I really look to enter. So like, for example, in this case, if we're waiting for sells at this area, like we can flip it both ways, right? And I'll give you guys the example of how I take a look at it. And yeah, we'll do US 30 analysis today. But for example, for me, what I would be waiting for in terms of the sells, I want to see price action reject as we did already in the past. But then to give me really that stronger confirmation, I want to see like the breaks below this structure area. Because at that point, even looking at this 5 minute right here, we'll see, for example, how it's still very much kind of climbing towards the upside here. And so if I'm looking for sells, I want to see this. I want to see the rejections, but I also want to see the breaks of the structure. So that way I know that price action is now going against the overall flow, kind of like if price action is doing this. I want to break that structure. That way you can be on the lookout for those moves that lower, those retests off of those areas. And then you can look for something like that. That way you know you're at least clearing that structure which was pushing price towards the upside. So right now what we're getting is good because we have, for example, like 1 minute and 5 minute candles rejecting. So those are the lower time frames. Right now, NYSE just opened. So let's look at that on the 30 minute really quick. So looking at this on the 30, it does seem like price action is slowing down just based off that candle closure. You have a very strong candle right here, followed up by a weak doji candle. It's an indecisive candle because you have rejections on both ways. You have a top wick, you have a lower wick, very small candle, right? So it's sort of pausing, in my opinion, at this area. That 30 minute is not giving us much information other than price is indecisive. Looking at it on the 15 minute, also kind of the same thing. You have price action pausing at this area, closing bearish, followed up by a bullish candle, right? Again, a little bit mixed. So we're still in that same zone. But I think, again, still with these overall rejections, we would really just we would have to start trading below those 60s for us to really tell like, okay, we've clearly rejected that area. We could push down into like these 50s right here, these 45, 50s. But now that we understand gold, I don't want to keep on repeating myself. Now that we have market open here, let's go on to US 30 and let's do some technical analysis here on this one. So this will be our first time on this stream doing US 30 analysis. So if you guys have US 30 analysis yourself, as I explain myself, go ahead and actually type that analysis in the chat That way I can look into it to see if you're leaning more towards the sells, more towards the buys, kind of like what we did on gold here. On gold, we've already made it clear. We have our scenarios. We have, if we get the rejections at those highs, we'll be waiting for the rejections and those retests, so that way price can push lower below the 45.70s. If we clear those highs, then in my opinion, for at least for me, what I would be on the lookout for would be a break and retest, right? Because I don't want to get caught, like Ian was saying earlier, I don't want to get caught in a liquidity grab. I don't want to be more bearish, because at least for me, because we're fundamentally bearish and technically bearish on gold, I would lean more towards the sells. You just right now don't really have the technicals aligning with that in terms of the timing, right? So what I would want to wait for is, again, I want to see if price action can break out. If you break above and just retest and stay above that area, I know that the sells are invalidated at that point. No need to fight the market. But if I see that price action maybe has a momentarily push up and then it just ends up breaking back to the lows, like kind of like this, you see it right here where price broke above the area, but it didn't really close above. And then you can see the retest afterwards where price action literally, it rejects, makes a move lower, but then it still retests that area and pushes lower. So that's what I would be on the lookout for. Right now we're breaking out, so we'll be on the lookout for that. In terms of sells, no need to force it because you're getting those breakouts right now. But again, we're still cautious of what could take place. So let's take a look at the US 30 here, and we'll give gold a few minutes to settle here at these highs. But if you're trading gold, guys, make sure that you actually pay attention to that price action as I go ahead and break down US 30. So US 30, looking at this from the daily time frame, we can see that we're on the more bullish side, right? US 30 is more bullish. We can see that very clearly with the highs that are being created, highs, lows, highs, lows, highs, lows, right? So that way we can see that. We have these highs here, and again, more lows that got created. But overall, still pushing towards the upside in my opinion. Let me just zoom in here. I'm gonna mark off a few zones here. I have these are the 49 400s. Yeah, 49, let me see, kind of like 49 480s more or less, and then the highs are at the 50s, which is these highs right here that line up with this one. And then we have another area right here. We're gonna refine this on the 4 hour now. I wanna see what this looks like. Okay, there you go. That's what I wanted to see. Yeah, so on the 4 hour, we could actually just move this a little bit higher here. We'll leave that marked off like that. On the 4, we have this area of support. It's a clear area of reaction, whereas we're literally reacting at this zone right now as we speak. And we have these lows that I want to make sure we don't just completely ignore. But okay, 4 hour candle or 4 hour time frame looks a little bit mixed because it's like, let me look at this on the whiteboard so that way it makes more sense. It's a little bit mixed in my opinion because of the fact that price, let me move this. We have clear structure where it's like, okay, we have highs, lows, we have highs, lows. These are the highs that got created. These are our new lows, highs that are basically equally high to these. But look at how we broke out of that structure. We've broken below this low point here. And so that's signaling a shift in the structure on that 4 hour. And funny enough, right now, as we speak, we're reacting at this area. So in my opinion, if we're gonna continue bullish, this is literally almost same scenario as gold. Excuse me, guys. Sorry about that. Excuse me. Similar scenario to gold, where we're at an area of interest where if we can maintain above this zone and continue to break above this wick high, in my opinion, overall, following this structure, we should be on the lookout for further buys on US 30. But if we continue to reject and stay below this area of interest, again, almost same ideas as gold, that's where I would be on the lookout for sells to mirror this move and go and retest these lows on US 30 right here. Excuse me, guys. That's what I would be on the lookout for, just because of the fact that we've broken out of that structure. Let me clear this so that way we can see that. We broke out of that structure that we were on, which was above here. We broke that structure right here. We're retesting now that area where if we fail to break above, then be on the lookout for sells down into these lows, at least a slight recovery down into like the 49 100s. That would be the overall range, right? But it'll be easily cleared if, for example, we have price, how it's pushed off this area. If we can trade above our zone of interest, looking at the previous price action, we've at least gone to retest or to make highs around this area right here. You can notice where price action kind of goes to, which is the 49 700s. So above the 49 500s, which is this zone of interest that we have marked off on US 30, that would be our buy zone above that area. Okay, that's what I'm looking at in terms of technicals on US 30 right there. Okay, let me see. Just grab a sip of water here. I want to see what you guys have to say about US 30. Let's say Iam. Is your name Iam or I am? Or do you have a nickname? I have read Naked Forex and few other books to help me understand the market. Do you have any books that elevated your trading? I think in terms of trading, to really learn about trading itself, stick to the markets. I don't know of any book that you're gonna read, in my honest opinion, that is gonna make you a better trader. Like, only talking about this from a technical perspective, let's say. Like, you really just gotta analyze the markets, do your top-down analysis, do analysis on multiple pairs, but it depends on your trading experience. Like, if you're not too experienced, stick to one pair to like do your analysis and trade, but you can obviously practice analysis on other pairs as well, you know? And it also makes sense if you're using things like, if you're just looking at USD pairs, you can look at USD JPY, GBP USD, Euro USD, gold, and they're all gonna be a very similar analysis because of the correlation that it has to the dollar. So again, I'm not entirely sure. If you want, tell me a little bit more about your trading experience, and I would be glad to, I guess, you know, give you some more guidance on that. But yeah, if you're new to trading, you know, stick to one pair and just master that one pair. You know, get good at that. Maybe two pairs could be good to look at. But as practice, you could practice on any chart, to be honest. Now, you want to get good at trading in the sense of like psychology-wise, trading in the zone. That's right there, best advice I could give you. If you read Trading in the Zone, or I would say if you're a trader and have not read Trading in the Zone, then I think you're slacking right there, because Trading in the Zone gives you great psychology tips. Trading in the Zone was one of those books that really changed my perspective on trading, because I used to be a very strict fundamentals trader, you know, strictly looking at fundamentals, wasn't too worried about the overall technical flow. I was more so trying to understand the market narrative, the fundamentals, and I would follow that. But when I read Trading in the Zone, I realized that whether you have technicals, whether you have fundamentals, whether you do both, you're really never going to truly understand the market in a way where you're gonna just have perfect trades, right? Everybody's gonna have different strategies, different perspective, different ways of looking at the market. And so you don't have a need to really fight the market by only sticking to technicals, only sticking to fundamentals. That's why for me, I found that balance within those two. You know, use the fundamentals to have the overall edge, use the technicals to give you that timing. And I mean, you guys see what I do, which is, you know, we talk about the fundamentals, but then we dive deeply into those technicals to really give us that precision right there, right? And you see how we even break down both sides of the market, right? Because again, we're not here to fight the market. We're here to prepare ourselves, and then we react as the market flows. As the market moves, we react to it. As long as we have our preparation set, I think it's hard for us to be lost, you know? Because for the most part, I think that's what most people struggle with in the market. You know, they do their analysis, but they're super married to one bias, and the market starts to go against them, and they're forcing trades, over trading, You know, like it makes almost no sense when you do that. So that's why for me, I prepare myself both ways. I know exactly what I need to look at. I just react. I wait for my edge to come and I react. That's simply it. But yeah, trading in the zone is a really good one. Market Wizards, also a really good one. That one right there also kind of proved to me that fundamentals is very important to the market, because Market Wizards is a book about, it's not really a whole entire book about a specific subject. It's more so interviews of traders. So like one of the first interviews that I read was about this futures trader, and the most money he made was, this was back in like, I'm gonna get the years wrong, but I think this had to be like the 80s or something like that, where there was a war that was going off. I can't remember exactly, I wish I could, but if you read the book, you'll see what I'm talking about. And he basically started to just buy and hold gold as these geopolitical tensions escalated. And so he made a fortune just buying gold for like an entire year as gold skyrocketed because of the war that was going on at that time. You know, so it's interesting how even in those times, they use that fundamental information to have an edge against the market. And this guy made millions of dollars doing this. You know, it wasn't like a little flip of an account or nothing. No, he made millions of dollars strictly following that edge that he was on. I think he was literally just buying and holding gold. You'll see it in Market Wizards. So yeah, I would say Market Wizards, trading in the zone. If you haven't read any books, stick with those two for now and get through those. And then you can read a little bit more about, like, what's the other name of the book that I read into? I'll have to look at the title, but I have it on my Discord. Let me see. Let me go back to US 30 here. So you're looking for sells around the 49.66s. So the 49.66. So you're looking for higher sells at these areas here. Let's see. Let's look at that on the one. $4,900s. Okay, right here. So you were looking for sells off of this area here. So if you can get exhaustion at this, at that zone, that makes sense. And then further pushes back below this area, which we were talking about, below the 49,480s, I would say further sells below that zone. If we trade above what we're doing right now, I would just be on the lookout for further pushes back up into that area. What was your name again? Ken. Ken, you were looking at sells off of these highs right here. And then I would agree to say, okay, we can have sells if we can reject that area there, as well as sells below this zone once we push below this area. Above this, be on the lookout for corrections back into those highs. So this would be more of a buy zone. Above the 49,500s would be more buys up into like these 49,650s right here. So right now, US 30, a little bit more bullish as we're trading above those 49,500s. So just be on the lookout for further recoveries above that area right here. Only sells once we clear those lows. So US 30, we have that clear. And then gold is kind of struggling at this area here. It's still bullish on these lower time frames, because we still have this lower time frame structure being respected, and we still have price creeping higher little by little. You notice that? That's why I want to really see the breaks below here. That's kind of why I'm looking at that overall zone on these lower time frames as like, okay, once we really get that break of the structure on the lower time frames, I'm thinking we can do a deeper retracement into these zones right here, into these lows. But we got to get the rejections, which right now it's still rejecting, but it's also still climbing. You get me? Because it's like, look, the climb, this is a high, low, a high. Notice how it's higher than the previous, right? That's one. We have then equal lows get created, and then another high, a new high here, also higher than the previous. So that is still telling me that price is still climbing towards the upside. It's still pushing up without us breaking that lower time frame structure. Again, what we'd want to see is the break of the lower time frame structure, followed up by then at that point, maybe some deeper retest and then continuations lower. That's what we could see. Because if not, then we won't clear those lows. We're still on that overall flow and price action can still continue to climb little by little. So we want to make sure, again, we eliminate that and start just to go on the opposite price action there. Oh yes. My name is Yashua. Nice. You go by Great Day? Okay, if I don't remember Yashua, then I'll call you Great Day. And okay, if you're new to trading, take advantage of these sessions right here. I'll be happy to help. If you have any questions on the analysis that we do, why we look at the lower time frames, why we look at maybe the daily, the 4, the 1 hour, I'll be happy to answer your questions. AD, okay, I'll call you AD because I think we have another Ken that joins this stream, believe it or not. US 30 made that push in a few minutes too. So watch as we reach into the zone. Right now it's still pretty strong in my opinion, this bullish price action on US 30. So we know only sells would be valid if we end up rejecting this area. But with this current momentum that price is on, be on the lookout for further buys if we break above that zone there. I'm gonna leave that here on the 5 minute. But yeah, super strong price action here on the buyer side on US 30. Look at that. I want to pay attention to gold. This 5 minute, yeah, 5 minute. Oh, it's still bullish. Look at how, if we analyze that market there, that 5 minute right now, it like tried rejecting, but overall, just by looking at the market, we have our lows, which were down here. These were highs. Overall lows still respected. This was kind of like a range that got created before finally popping to the upside, giving us this new high, this new low, a new high, and then these are our lows. So our overall structure is still, it's still valid. This 5 minute candle that just closed, you can see it was trying to retest these lows, but then look at that engulfing candle. So again, still buyers in the market right now. You know, all we're getting right now is a pause. So in terms of sells, I would be more confident once we get the break and the retest. That would be, in my opinion, my better entry zone right there. I wouldn't want to enter just off of this right here because price can easily right now still continue to push towards the upside. And I don't want to fight the market. So right now, buyers are still in control as we continue to respect that overall bullish structure. We don't break our low points. It seems like price action right now is trying to push back into these highs. Let's see if we can get a pop up into those 45.80s there. But I'm still thinking probability-wise from these technicals, gold can still push higher. We just need to break those highs right now, where price is at. Yeah. If we can break those highs, then we know buys are still likely to flow. But let's just wait. Today, really just focusing more on price action. Damn, look at that rejection off of those highs right here. Give the stream a thumbs up, guys. But yo, I'm seeing a few new names in the chat. Tell me a little bit more about your trading as we analyze price action here. Sorry, tell me a little bit more about your trading. But all right, gold is breaking still those highs. So the momentum's still clearly towards the upside as we were talking about. The rejections that we're getting are not strong because we don't break those lower time frame structure points. So overall, that push, you can see that momentum is still flowing towards the upside. It's having a little bit of trouble. It has trouble as it reaches highs. You notice that? Like so far, like if we analyze this on these lower time frames, look at how, for example, the way that the market is behaving right now is that as it reaches new highs, you have at least somewhat of a pullback, which was in this case right here. Then again, look at how price is strong and pushing into those highs, followed up by another pullback back into the lows. And it did that once more, or even twice, because it did it right here when price action reached these highs, and then it had a move literally to the middle of that range right there. Then once again, it reaches and it creates new highs, and there's another pullback. So right now, unless we get a strong push and we invalidate what I'm pointing out right here, then that would be different. But based off of the behavior that we're seeing on price action, as we reach new highs, we get a pullback before continuing. But we're not having like these strong continuations. It's not like price action is reaching highs and then pushing before maybe doing a pullback. It's more so reaching highs and pulling back, and then reaching those highs again and then pulling back, and then reaching the highs, right? You get the point. It literally did that a few times. So if we see strong momentum, we'll just see the push and we'll be just simply on the lookout for the retest. And that'll be a lot more simple, right? But we do see that we have those pushbacks right here. So again, as we're creating these new highs, analyze price as it's doing that. Be on the lookout in case you either gotta secure profits because you went for bias and you don't want to get caught in price action doing a pullback on you and you get stopped. All right? Or if you're waiting for pullbacks to take place, then you could just be on the lookout for those retests. Make sure price action does not get back below this area here. And you could just wait for, again, the retest. And you have, again, that strong push. But overall, you see how we were pointing out that lower time frame structure from the beginning. Now we have our new high. We still have our structure point. That still gives us room to retest and then overall continue. Sells would be valid still once we get below that area and break that overall structure point to have a push lower there. But anything above this, we're still following momentum from those buyers there. So watch gold there. US 30 also getting those pushes above. So the ideas that we were talking about earlier in terms of sells off of the 66s, only valid below those 60s right here, the 49.66. Below that area, be on the lookout for pullbacks, possibly into like these 520s right here, 49 520s. Sorry, I'll point that out one more time on this screen. Again, below the 49.66, be on the lookout for pullbacks into these 49 520s. Anything above those 66 can signal further bullish price action. Based off of the current momentum we're seeing, I'm seeing zero pushback from buyers. And so there's no reason to try and fight that right there. That's why when we analyzed this earlier and we saw it on the 4-hour, we understood that this overall zone, that 49 500 area, was the main area that we needed to stay below to really push lower and kind of mirror this move right here. Because anything above that zone signaled more buyers. And that's basically or exactly what we saw today. Price trading above the 49 520s or 500s And we're now even pushing higher than the 49.66s, all right? But our overall zone still remains this one, 49,500 below this. That's where most likely you'll get those deeper pullbacks there. But right now, I'm not worried about that, as look at that push on US 30 right now. Super strong push. Gold pausing now at these new highs. Let's see if we can create lows and retest before continuing to push higher. Let's see. AD. Wait, no, that's AD is Ken. My bad. You are Yeshua. Do you recommend only one? Okay. Oh, my bad. Let me read this one more time. Okay, you recommend 1 to 2 assets to trade. True. And assets that are on the same. Like I would say stick to USD pairs. Do like Euro USD and GBP USD, or USD JPY and Euro USD, or USD JPY and XAU USD, right? Like stick to USD, because that way for you it can be as easy as, I don't want to say as easy, but it could be more easier in the sense that when you have an edge, you can look at the dollar and have an understanding of whether the dollar it has strength or weakness during that time of trading. Right now, when we're looking at the dollar, we look at this as more weakness, just based off these previous candles that we're seeing. We see more weakness on the dollar. We also see it on the percentage change right here. We're down 0.24%, 0.24%. So clearly, again, dollar under some weakness. It makes perfect sense as we look at gold, and we see that gold is having more strength right now. If you look at other pairs, for example, GBP USD, look at how you look at the pairs that are USD first. I'm not sure if you knew this, but I'll explain this to you really quick, because this is a good edge to have in the market. Look at how these USD pairs are low. They're in the negatives. USD JPY, it's negative. USD CAD, negative. But then anything against the USD, like GBP USD, where the USD is not the main pair, you have it in green, right? You have it more bullish. So GBP USD, against that dollar strength, you're having a push towards the upside. Euro USD, having a push towards the upside. XAU USD, push towards the upside. Do you see that correlation right there? Even silver, look at silver right here, you even see that. So that way, when you're looking at the market and strictly trading USD pairs, you look at the dollar as that main frame, right? You kind of look at the dollar and you understand, okay, weakness on the dollar, let's look for strength on other pairs, right? Not exactly, it's not going to precisely be like that all the time, but it is an extra edge that you have on the market. You saw how we used that from the beginning. We understood that dollar was under some more pressure. That can mean that gold can continue bullish. We just need the technical confirmations, which is price trading above the 45.75s. That's our area of interest that we need to stay above for us to have that clean continuation towards the upside. Does that make sense? So that's what I mean by, like, you can get away with 2 pairs, but in my honest opinion, 1 pair is good enough. If you look at 1 pair, especially pairs on the USD side, you'll typically have a good enough volume during the market where you're gonna have moves take place. You don't wanna get caught trying to analyze multiple pairs, and then you get caught trying to make decisions on multiple pairs, and you're just not too prepared for that. Not to say you're not ready for that, but even the best traders that I know trade 1 to 2 pairs max. And honestly, mostly 1 pair. They trade 1 pair, they milk that pair and they go for it, and that's pretty much all they do. Because you got to think about it, when you're in the market, you're not looking to be too active. You're looking for 1 to 2, maybe 3 trades per day. Why look at 6 different pairs then? You know, that doesn't really make sense. While you're looking at 6 different pairs, your brain is going to naturally want to trade all of those pairs. Before you know it, you're going to get caught in, you know, too much trading, too much over trading, too much activity. And those are the things that you want to avoid. When you're looking at 1 pair, you're a lot more calm. You're simply waiting for your edge to play out. You're waiting for your plan and for the market to align with what you want to see. And that's pretty much it. You're a lot more calm. You're not here looking back and forth between what is this doing, what is that doing. You're just more composed. So that's why I say sticking to one pair is better, and you master it. You know, like, do you think you're gonna get better trading one pair or 6 pairs? When in reality, it's like you only have so much time to look at the market. You look at the market for what, 2 hours a day during trading? Anything other than that is extra. You shouldn't be looking to trade. You're just doing maybe analysis, you're studying the market, you're maybe understanding how fundamentals have impacted the market, but you're not really looking to trade other than that trading window that you have. And do you only trade New York session, or do you also monitor trade London session? If you get a trading view alert, appreciate the feedback, brother. But no, I strictly stick to New York as well. Same thing as the pairs. You want to stick to one session only because of the fact that you do tend to overtrade when you look at multiple sessions. In my opinion, it's just better to keep it simple, in the sense that, like, think about how simple it can be when you look at one pair, one session. If you look at one pair, one session, and 3 months pass by, think about how good you're gonna be at that one pair and that one session. Not 6 different pairs, 2 different sessions. Months pass by and you're confused because you're like, damn, I had moves on London. This was moving during London while this one moved during New York, and now you're going back and forth, and then you think, no, wait, there's better moves during London, but then actually New York plays out. You get me? Like, it just starts to go too much. It starts to get overwhelming in a way. So yeah, it depends. Like, tell me how long you've been trading for, and then I'll give you honest, like, okay, you know what, stick to this. And then we'll talk again in a month and see how that played out for you. But look at gold. Notice how it's not doing anything random. Did we or did we not talk about this just now? Which is literally what I just pointed out. What did I just point out for you guys? The fact that every high that's been created has been followed up by a pullback. High, pullback. High, pullback. High, pullback. We had another high, another pullback. And then it goes to precisely the same area, which is these lower time frame lows. Almost. But you guys get the idea. If you get like the overall, let's see how straight I can do this. Not that bad. That's not too bad. But you get the idea. It's around that price range. You know, you can even circle this out, and it's a price range where overall it does look like buyers continue to push into this area, and they continue to push price off of that zone. It's hard right now to really still tell for look out for those sells, because it's like, at least for me, I don't look for price action to invalidate, let's say, highs, and then I sell. I more so wait for the rejection of the highs and the retest of those highs for me to sell. So right now, that's what I would be on the lookout for. I would be waiting for price to break those overall lows, for one. Once we get that, then we can understand this as a clear rejection, because right now it only looks like a pullback. We won't know it's a clear rejection once it's really below this. Like, obviously it's rejecting, don't get me wrong, but what I'm talking about is like the continuation that we want to see below the structure points. That's where, in my opinion, we can see a deeper pullback. If not, we're just doing a pullback before the overall continuation. And it's like these pullbacks have gotten stronger and stronger and stronger. I just noticed that as I did this, which was, it was a slight pullback, a little bit bigger, a little bit bigger, a little, you know? So it's like, if in terms of market repetition, if we just go here and reject this area, we're gonna likely push right back up to this high, where at that point, if you can't really break above that high, then that could be a better sell opportunity. You just need at that point for price to really break those lows still. Those lows are still that area that we're looking at for us to really break below. I'd be wrong if I said that deeper pullbacks wouldn't take place once we get below that area of interest right there. Does that make sense? So we'll analyze price action here. Since we got on the market a little bit late, I'll stay on for a little bit longer. Probably another we'll do another 15 minutes. I want to see what gold does. I want to see if we can finally get the push below and break out of that overall structure that we're on. And then I will really at that point just be waiting for that retest and then that continuation lower. But let's see, it does seem like those sellers are trying to, let's look at the dollar, see if dollar maybe also had a strong reaction. Oh yeah, it kind of did, which was the reaction off of these lows. It's right now pushing against that overall bearish price action we were looking at earlier. This slowed down a little bit at those 49,700s. Watch for pullbacks below those 66s, which is what we were talking about earlier. Have any of you taken any trades today, guys? Okay, I understand better now. I have been trading for 2 to 3 months now. Okay, so yeah, I would honestly say you already have your 2 books to look into, and then you have the USD pairs that I would suggest you look into. Obviously, do as you wish. But in terms of understanding market movements, if you are familiar with what the dollar is doing, you're going to be very aware of the overall market. Because for the most part, a lot of markets are really just following what the dollar is doing. You know, whether it's going against what the dollar is doing, going with the dollar. But we know dollar as a global reserve currency holds major weight in the markets, especially because of the economic data and the recent news that we've been seeing, the war in the Middle East. Everything is kind of revolving around, you know, oil and the US dollar. So that's why I say stick to USD pairs. And it's also because of the volume that you get, which means more opportunity. All right, gold literally got basically to those lows. We pushed slightly below it, just below these lows here, still reacting there. We need to close and stay below that area. No trades so far. But Joshua, does that make sense? So you just look, I mean, it depends on your schedule too. If you know you're available and free during New York, stick to New York. And especially now that you can join these lives, honestly, I would just subscribe to this channel because we're gonna go live every day. So you'll get the notifications every time that we go live, and just follow along. You know, I'll be here every day answering questions, going over analysis. Last week we did mainly gold. This week we're gonna focus on gold and US 30. Going on to next week, we're gonna do gold, US 30, USD, JPY. And little by little, we'll cover multiple pairs. But we're gonna mainly focus on, you're gonna see GBP USD, Euro USD, all those USD pairs. And like that, we have one narrative that we're following. We understand what the dollar is doing. We understand what the markets are focusing on. We can follow through with that. And it makes it a lot easier for us. So you'll personally be able to see the multiple analysis, but even for you guys, I still strongly suggest stick to the pairs that you know. Stick to the pairs that you're familiar with. That way you know you can take trades on that and have full accountability for yourself. But little by little, we'll expand our knowledge more and more. We'll dive more into those fundamentals as you guys have, you know, more questions. I don't want to overwhelm you guys with information as well. I want to make sure that everything that we talk about during the stream, which as you guys see, I talk a lot. I rant because I'm passionate about what I do with these markets. So as long as I can give you guys some valuable insights, some value without overwhelming you, and just explain the basics and the overall flow of what we have going on, that's what I'm here for. And you're gonna see that we've done so far. Last week we were on point. We haven't even looked at last week, but if you guys remember last week, were we or were we not looking out for more bearish price action? Still preparing ourselves for potential buys, because we don't control the market. We are simply prepared, but we knew where the buys were good from. We knew what we needed to do for the buys to play out. We knew what we needed to wait for more sells to play out. We were prepared both ways, but leaning on the bearish side because of the high inflation numbers that we saw last week. For those of you that were in the trading sessions last week, let me know, were we on point or not? That was our first trading week right there, and we had overall moves during the entire week. We'll measure it from these highs right here, the 4700s. Overall moves last week, this is 2,000 pips worth of movement. I'm not saying capture or try and catch the whole 2,000 pips, but think about the opportunities that exist within those moves right there. We even did it before, right? Because this was Monday. Then we had Tuesday right here, the CPI report. Wednesday was the PPI report. Thursday was retail sales. Then we had those geopolitical tensions escalate, and we had that push towards the downside there. We were prepared for all of it. Again, not expecting it, not anticipating it. We were simply prepared. We knew exactly what needed to happen for this to play out. We had the zones marked off. We knew what needed to happen. We waited for that. We saw that. And then it's as simple as just trying to now follow along with those technicals. It's exactly what we're doing right now. That's why literally on the last day of the week, on Friday, as price was reaching this zone, we objectively looked at the market, and instead of mirroring the sales, we still at that moment were very objective in the sense that, look guys, we've seen strong reactions in the past off of this zone, right? Look at it right here. I'm gonna show you guys this. Can I see this on the 4? Yeah, I could see this on the 4. Just to literally analyze this with you guys once more. Remember to pay attention to the price action, guys, because I'm noticing that gold is now starting to be a little bit more bearish right here. Before I do that review, pay attention to this, guys. Pay attention to the fact that now we're starting to see something a little bit different, which is let's follow it from the beginning. We have this. We have the overall structure towards the upside, but now we have this strong push low into these areas here. If we do not break back above here, I'm thinking price can stay here and then push eventually lower. Still looking at that same lows right here. The 4560s is really what we're kind of looking at. But now it's different because we have this strong sell-off from those highs, signaling to us some sort of seller strength off of this zone. Again, we just need that follow through below that zone of interest. This is now what I would look out for. Rejections off of that zone and then pushes towards the downside. If not, we're still respecting this overall flow. And if we trade above here, then that means price is still gonna flow towards the upside. So we need to now make sure we stay below those 70s, those 72s really, and then break those lows right there. That's on gold. So we'll give it a few minutes here, and then we'll call it a session, guys, just so that way we don't get caught in any mess. US 30 also having its push off those 66s, going along with the, who was it again that said it earlier? 4966, I believe, AD. AD, you were calling that out right there. Your idea is playing out as we speak. This is what I want to see gold do. Which is you have bullish structure overall. You have these lows. And then you have price reject. As it did here, it's creating new highs. If now that we broke these lows, we can possibly stay below those 49.66s and then make a move. Oh gosh, sorry, let me just move that real quick. Right here. So I want to stay below the 66s on US 30 so we can look out for a push lower back into these lows and into these lows right here, because we've sort of shifted out of this minor structure that we have here. Anything above that would be following the overall flow, which would be above this area of interest here. So I'm pointing out those areas of interest for you guys. You have these highs right here, and then if you break out of that, you can obviously expect for a deeper push towards the upside there. That's US 30 that we're looking at right here. So let's pay attention and see if we're gonna get any sort of exhaustion at this area here for potential sells back lower. Kind of like I want to see exhaustion like this, where it's like candles are trying to push higher and closing weak. I don't want to, anything that's closing strong above the area, be careful with that. But I want to see strong wick rejections, candle closures back below the zone. So again, get those retests off these lows and then potentially lower here. Gold, I would like for it to do a similar thing. Look at how it's kind of the same thing. I could even line it up, which is the bullish structure, the push up, the rejection, the breaks, the slight breaks below our area of interest. It slightly broke that. We need to now just stay below to really push and get below these lows here. Sorry, it's getting a little bit messy. But basically this, we need to reject and expect to push lower once we clear these lows right here. Anything above is just going to signal further bullish price action. And again, you prepare both ways, because you obviously, here's what I want to make clear for you guys. Because you guys, now that you see me preparing both ways, it's about having preparations for both ways, but you need to have a clear bias as to what you're waiting for, okay? That's where, for me as an analyst, I don't go as deep as telling you guys what you should be waiting for. When I really do that is more so those days that we have the economic data. Because at least for those days with economic data, we have a much stronger edge in our favor. Every other day, you're gonna see that I'm gonna help you guys prepare both ways. And then at that point, it's really about waiting for the market to do what it's gonna do. And then we talk about whether I took buys, whether I took sells, whether you guys took buys, whether you took sells. We analyze that, journal that, move on to the next day. Because if not, then it becomes a competition between you guys and me, where it's like I'm looking for buys, you're looking for sells. Then I want to be right, you want to be right. You know, none of us want to be wrong. And then it just becomes a thing of ego and not really about what it's about, which is the markets, right? The awareness and the knowledge that we're trying to extract out of the markets here. I'm not trying to be right or wrong. I'm not trying to prove that I'm better than you. I don't care if you make more money than me. You shouldn't care if I make more money than you. Everybody has their own trading journey and their own specific perspective with the market. We have different trading goals, different lives. There's no reason for us to try and sit here and compete with each other when we have enough competition, which is the market itself, you know? So that's why, again, you'll see me prepare for both ways. I obviously have a clear bias in my head, and I've even said it. I'll say it throughout the stream, you know, with those subtle clues that I throw out. But either way, you'll see me break it down step by step, both ways. So now what are we seeing on gold? A follow through below our zone of interest. Is it or is it not following through on what we were talking about? without me specifically telling you this is what the market's gonna do, because I'm not a market wizard, I'm not a market maker. If I was, I'd be putting down $1 million per trade, right? But did we or did we not talk about this right here? Joshua, I can't trade gold or US 30 yet because I don't have enough money in my account, but your analysis still teaches me how to properly look at the market, so thank you. Of course, man. That's what I'm here for. But right now we're seeing a clean follow through below that low price point of interest, which came just after we slightly broke below the zone. Not a very strong break. We had price almost retest that area of interest. You can see it attempted to retest that area, but it failed to do so, and now we've pushed lower. You see how the momentum picks up once you start getting below those structure points? I'm not just pointing these things out for shits and giggles here, guys. This is real market awareness that we get from the lower time frame price action. Specifically talking about gold here. Sorry about that, guys. So now it's really just about preparing for the next possible event or possible scenario here when looking at gold. Now you have, this is where I was talking about earlier, where it's like we didn't know if this was a liquidity grab until it became a liquidity grab. You get me? But after we saw that, what did we prepare for? We understood, okay, well, we've gotten this strong sell-off off those highs and showing us that sellers are stepping in from that high price point. We're still respecting that area of interest at those lows there. We know we need to be trading below that area for us to have deeper pullbacks, possibly down into these zones right here, those 45, 50s. Right now, as you can see, we had the push below, which was basically this right here that I just pointed out. So, sorry, let me just circle that. That's what we're looking at right there. The retest, or the attempt to retest those highs, and then the follow through right here below the area. But notice how it came after we finally broke below the structure point. Notice how it came off of this sell-off. It breaks the lows, even if it was momentarily. Remember, we're looking at the lower time frame, so it's not going to be super precise every time, but it does give us an average and an understanding of what it's doing around that area. We saw that price reach the zone, had its reaction. It still broke below. It had its reactions. That's why at that moment, what did I say? We said, okay, we've broken below the structure point. We now just need to make sure we do not get back above this area, because we know above here is where we signal deeper pullbacks towards the upside, following the overall momentum that we were on. But if we break out of that structure and we retest these zones, we just need to stay below that to push further lower. We need to now break the lows for us to have a deeper move down. That's literally what we saw. Again, without picking or choosing sides, we prepared for this perfectly before it happened. We now just need to have volume in our favor, momentum in our favor, to potentially now break lower and still following the overall move, which is, again, don't get back above the 45.72s, and then now you have structure in comparison to what we saw earlier, which was higher highs, higher lows. You then start to go against that structure and you create lower lows, lower highs. Does that make sense? Yes or no? I would like to know if that makes sense, because that makes total sense and perfect sense for me. So I want to know if you guys can understand that as well. Just so that way we're on the same page, literally analyzing price action by the minute here. Not looking at this as noise, not trying to overcomplicate it, just taking it level by level, structure, watching the structure points and those key levels, and then obviously being aware of where we at, where with the intraday timeframes in our favor. That makes sense? Okay, thank you for answering there. I appreciate that. But so far that was a that was a clean little move there. Just want to see if we get that continuation now in our favor. US 30 had minor reactions at this area. Be on the lookout now that price is closing above. You can see push towards the upside if we continue to break out of these highs here. But all right, guys, we're nearing the end of the stream here. If you guys have any questions, make sure to do that right now. If not, I will catch you guys tomorrow during our session. Remember, we do this every day. We will start usually around 8:15 in the morning, Eastern time, which is just a little bit after New York Open. If not, we'll start before NYSE Open, which is before 9:30, which is what we did today. We started around 9 a.m. today, which was like when the 4-hour candle was closing, 30 minutes before NYSE. You know, we didn't have any economic data to be on the lookout for, so we didn't have to be on earlier. So, but we're gonna start to, I'm gonna see if I can do like a live premiere. That way you guys know exactly when we're gonna go live every day. But yeah, if you subscribe and if you have the notifications on, you'll get the notifications each time that I go live. So if you know you're trading in the morning, you know you're trading during New York, just know we're gonna be here on YouTube breaking it down level by level, as you guys saw that. You guys saw we literally broke this down step by step. And especially gold, because gold we have a very good understanding of gold and how it moves. Obviously, it's not always going to be perfect. Some days price action gets really messy. It gets very sporadic. It doesn't really flow too well. So far today, I think it's looking good because we understood when it was more bullish. We understood when it was more bearish. We had the technical confirmations in front of us. Right now, we're just waiting for more volume to push price lower. But I'm thinking, yeah, if we can continue to break those lows, then we would be creating more bearish structure now off of the rejection from the highs right here. All right, guys. So it looks like we're all good. Once again, guys, I appreciate you guys for coming. Thank you guys for showing up. We will be here every single day, okay? Remember that. And if you guys have any further questions, I'm going to leave my name for you guys right here, which is... just follow me on, you can just DM me on Instagram, that way I know it's you. But you can look me up, Tarzan Trades on Instagram. And again, any further questions, anything that you guys might need, I'll be happy to help you guys out. All right, guys, good trading session today. Pay attention to price action.